If you are new to trading and investing, or maybe you're just looking for a better and easier system to use to help you create wealth, but you're overwhelmed with information and just struggling to get started with a system to actually start building real wealth, then this video will teach you a simple strategy with easy to understand rules that you can implement today and will work for anyone and any account size trying to build real long-term wealth and achieve some kind of financial freedom. I've been building and refining the system over the last 10 years. It helped me retire at 35 from my corporate job, build an 8-figure portfolio, and achieve a level of financial independence and freedom that, frankly, I never thought someone who grew up on a tobacco farm like me and joined the military right out of high school would ever be able to achieve. So in this video, I'm going to go through 3 examples to fully explain what this system is and how it works so that you can take it, copy it, modify it, and get it to work for you today. And by the end of this video, you'll see exactly why this is the only strategy that I use and the only thing that I look for in the market, regardless of what's going on. And yes, this is part of my 200-day strategy. Let's get started. And if this is the kind of thing you're interested in, then check the link in the description below. I put a free PDF that you can download that's got all of the rules for this system and the examples so you can see it for yourself and walk through on your own time and see exactly how it works. Check the link in the description below for that download. Here are the rules for the strategy. It has 5 rules. The first rule is based around the 200-day moving average, and it's got 2 parts to it. The first is the market itself needs to be above the 200-day moving average. So that's the S&P 500. It needs to be above the 200-day moving average. The second part of that 200-day rule is the stock or asset you're looking at also needs to close above or be above the 200-day moving average. So it could be well above it for a period of time, or it could be closing above it on a day, and that's what triggers the rule. The next piece, there needs to be a level of price support for the strategy. What that means is that there needs to be a point at which price is either refusing to go below, the stock is coming down and testing that price point and it keeps coming up off of it, but it's acting as kind of like a floor, or there needs to be a level at which the price is not able to get above. But if it does, then it will act as support. The third rule, there needs to be a trend break. This would be a diagonal trend line break from a point weeks or months in the past where price has not been able to get back to that and has been coming down and making lower highs. The fourth piece, there needs to also be higher lows being made by the stock. So again, over the last days, weeks, or months, price needs to be making higher lows. So price can still be going up and down, but when it goes down, it doesn't go down as low as it did last week or the week before or the month before. It's continually kind of stair-stepping its way up. And the last piece is price needs to make a higher high. So we will see as I go through these, price is doing that thing where it's moving around, it's going up and down, and the lows are getting higher and the highs are getting lower. What we look for is a day where now price makes a new higher high. The high is higher than it was a week ago or 2 weeks ago, and the low is higher than it was a week ago or 2 weeks ago. Those are the 5 parts of this strategy. If I find something that meets all 5 parts of this strategy, then my rules allow me to put a 10% risk into the position. And we'll walk through that in a little more detail later. I'm going to go through 3 examples. One is a more historic example from, I think, about a year ago. One is a very recent example of a trade that literally just happened within the last couple of weeks. And then the last trade is one that is active. So this is a position that I took the last day that the market was open before this video was recorded. So at the time of this recording, I do not know what is going to happen with the strategy. You'll be able to see, based on when you view this video, you can look back to the date at which I took the entry and see how it worked out in real time. It's not just after the fact, oh yeah, see, obviously this worked. I'm showing you in real time. I don't know what's going to happen with this strategy. You'll be able to look it up based on whenever this video is published, and you watch it and see how this worked out. Let's get started. The first thing we're going to look at here is Datadog. And I have a screenshot here of the chart, so nothing's moving around. It's a little easier to. And so on this chart, there are actually 2 examples of this strategy. We can look at both of them. So Datadog, the ticker symbol is DDOG. So if we look here on the left side, we can see that price made 8 and then proceeded to sell off, move down, came back up. And then even though price started to move down again here, this is September of 24, It didn't go as low as it did the month before. Good, that's what we're looking for. The white line shows here's the trend line. It made a high point, made a lower high, made a lower high, made a lower high, and we can connect those and look and see that that is a trend. So it made a lower high, and here in late September, it broke the trend line. We can also see this horizontal red line here. This is an area acting as price support. So you can see in late August, there was a point at which price came down to this area and wasn't able to get below it. And then when it broke, after it made the higher low and broke the trend line, it came and tested that same support 1, 2, 3, 4, 5 days in a row. So for a whole week, 5 days in a row, it did not get below this price right here, which is about $112. So it broke a trend line, made a higher low, found price support, and then if we use this point of the trend line here at the end of September, right around $118 as the high, it breaks that high point. So it's made a higher low, it's broken a trend line, it's got price support, now it's making a higher high, and lo and behold, on that day, it also breaks the 200-day moving average, which is this yellow line here. So at this point, like I said, I could have taken a 10% stake. Now, the way this strategy works, if any of these criteria, as long as at least 3 of these criteria are met, I can take a position. So as long as 3 of these criteria are met, I can take a position. The way this trade worked out, when this trend line was broken here and price came down and held this level, I took an entry here very end of September because I had a higher low, had trend line break, and had found price support. What I did there was buy about a 2 or 3% position here. When it made a higher high, I was able to take a little bit more and move up to about 5%. And then that same day, it closed above the 200-day moving average. And so I moved up to take a 10% stake. And then you can see price moved up, bounced around, and then finally moved up significantly higher. We zoom forward to 2025, the same strategy can work out again. Look, there's another trend line, made a high, lower high, and then it sold off. The exact same pattern, moved up. Here's a higher low, moved up some more. Here's another higher low. Now it breaks the trend line. So we have a higher low, we have a trend line. Here we have the price support. Price is not able to get above that 118 level, and then it does and holds it, and then breaks the 200-day and moves up. So these are 2 examples, kind of historic examples with Datadog that meet the strategy. But let's look at one that's a little more recent. So this is Reddit, ticker symbol RDDT. I have my buy points annotated here because this was something that I posted to my trading group so they could see on this day, post an update on this day, here's where my buy was. Here's today, here's another buy. My buy points are annotated with green arrows and my sells are indicated with red. So let's follow the strategy. We're looking for a trend line. We have a trend line here. But again, as long as there are at least 3 criteria met, I can start taking a position. When do I take my first entry? It's right here. This is the middle of June. Why do I take an entry here? Because we have a higher low. We have another higher low. So that's 1. We have a higher low. Price closes above the 200-day moving average. So that's 2. And then there's a price support. This level here, which is about the 126 level, forms a price support. So we have price support, 200-day moving average, and higher low. I took my first entry there at about a 2.5. I think it was right at 2.5%. Price moves up, comes back down, still isn't able to get below that price support, so I add a little bit more. At this point, just sitting in the trade, letting it build. After a while, the price support level moves up. So we can see it was 126. It moves up to about the 141 level. So now I'm able to move things up and take another entry here in mid-July. And then finally, the day after earnings, or the day of earnings, we get the full-fledged 5 points of the strategy. We have a trend line break. It makes a higher high. It's above the 200-day. We have a higher low, and we have price support. So all 5 things are met. Take a 10% stake here. And then a couple of days later, after earnings, the earnings reaction, start selling off positions, start selling off shares as price moves up. Again, there's the strategy. Higher lows, a price support, break of the 200-day moving average, trend line break, and higher highs. And then price moves on. At the time of this recording, I do still have some, what is today? Today is the 10th of August. You can see that up here, 10th of August. I do still have some shares of Reddit. And if it hits all-time highs, I'll take some more profits. Let's look at a current example. This is a trade that just took, and this is from my online trading group. You can see here the logic, and I'll walk you through it here. This is a screenshot for Tesla. 10 August 2025, this strategy has triggered. So I have not quite a 10% stake, but I could go up to 10%. So we can see that Tesla's been making higher lows, price is moving up and coming back down, but it's not going straight up, it's coming back down. But when it goes down, it's not going down as low as it did before. When it goes up, it's not going up as high as before. It's not going as low, it's not going as high. That gives us our higher lows. That gives us our trend line. And on Friday, price convincingly closed above the 200-day moving average. We have higher lows, we have a trend line break, we have above the 200-day moving average. We could use this here just after earnings as a higher high, that's 4. And then price support we have here at about the 294 level. Price wasn't able to get above that point, and now the last few times it's gotten down there, it has supported it. Those are all 5 parts of the strategy. This will allow me to take up to 10% stake in Tesla. For this particular entry, this is 10 August. Based on when this video is released and when you watch it, look up Tesla and see what happens from 10 August 2025. You can see how well this strategy works. Again, this is the only strategy that I use. I've been trading and investing seriously for 10 years. This strategy allowed me to retire from my corporate job as a management consultant where I was making good money. I was making a couple $100,000 a year working on the economic side of things, making good money. My wife was also working, okay, but using this strategy, we were able to achieve a level of financial independence that I didn't think was possible. Again, I grew up on a tobacco farm in rural North Carolina. I went in the military right after high school. I never thought that having millions of dollars or retiring before I was 40 was possible unless I went in the military. And that's why I did that. But using this strategy has allowed me to balloon our wealth and give us opportunities that I just frankly never thought someone like me would be allowed to have, because I grew up poor on a tobacco farm, like I said. Again, the 5 rules for the strategy, we can see them here on the screen. Price has got to be above the 200-day moving average. There has to be a higher low. There has to be price support. There needs to be a trend line break, and then there needs to be a higher high. All 5 things of those are met. There is a very good probability that price is going to continue higher and will likely continue higher relatively quickly. Those are the 5 rules for the strategy. Those are 3 good examples. If any or all this sounds like it could benefit you, building a well-tested, rule-based strategy, using discipline to control your emotions and execute with a high level of precision over time, really accumulate and grow your wealth, then I would invite you to join my private online trading group, The Construct, as you can see here on the screen. I will teach you how to use these strategies. I'll coach you on not only here's how to use the strategy, but how to execute it at a high level. Because it's not enough to have the knowledge, you have to know how to use the knowledge, when to use it, how to stick to these rules and build discipline so that you can control your emotions. And frankly, that's where most people have problems. The strategy part is easy. If you need help with the emotions, we can help you there. And also be a part of a supportive community that can help reinforce the learning, build those habits, and be there to walk that path of financial freedom and investing and trading with you. If this is the kind of thing you're interested in, check the link in the description below. Join the Construct today. We'd love to have you.